Okay, let's try this again. Yes, this is my second time recording this. First time, for some reason, my audio didn't record. I guess I must have had something muted. So, this is my Q1 2022 financials predictions for Tesla. So, what do I predict for the deliveries? Which, mind you, I did not have these published, but my guess was 12,943 SNXs. I actually had 14, they were actually delivered 14,736, which was pretty impressive. My 3 and Y guess was 3,118,000. Um, they actually only delivered 295, 398. So why was my miss so bad? Personally, I didn't think that I didn't account for the SNX increases that they were doing as much as they have been. Um, that's principally because Elon had mentioned in a prior interview that he shouldn't have refreshed the Model X, which I was kind of saddened to hear about that because it does need a good refresh. But needless to say, that was an issue that I'm going to have to take into account for future delivery numbers. As for the 3 and Y, um, that was principally because I was expecting Berlin and Austin to deliver vehicles this quarter, which obviously they weren't delivering vehicles. I was expecting a lot better numbers. So that was my main issue there. The 295 is still not a bad number. I'm not going to say that was bad. And what I mean by, in case you're wondering, why does it say actual guess from Tesla? Because it's a guesstimate from them. They don't know exactly what their delivery numbers are going to be until they get their final numbers in. They put their estimates out at the end of the quarter that they assume will be there, but then you're going to get some additional numbers. So that's going to impact the financials a little bit, which I do account for in my financial predictions. So gross revenue prediction, I'm going back 4 quarters, so you can see what they did. Essentially, the auto revenue, I'm expecting a slight increase, and that basically comes down to the cost or the increase in cost revenue per vehicle. I am putting up quite a bit of increase in there. As you can tell from the previous 4 quarters, it has been going up at a pretty reasonable clip. Quarter 2 to Q3 did not happen. I think that was mainly because they didn't have the SNX in line as much as they would have liked to. And I think the Model Y was getting a lot of numbers. And plus, I think Q3 also started seeing some vehicles coming in, purchasing cheaper vehicles coming in from Hertz. So we'll see how that plays out. Energy, I am expecting a decrease in energy revenue. I think the big one there is electric reported some stoppages in solar panel placements, which is going to impact Powerwall placements as well, because you're not going to do one if you can't get the other one done. I don't see Tesla doing that. They could, but I think it'd be kind of pointless to have a Powerwall without a solar panel. So I think that's going to be a big one. The nice thing is, once they can get the mega plant down in California up and operational, hopefully they'll be producing battery cells in that plant so they can make the mega packs directly there, which I think will help out. And if they're going to be doing that, that should also help out the Sparks Nevada plant, so they don't have to make those anymore, which would also help out Tesla and producing more 4680s and 2270s and 1865s. That'll be the big one for Tesla, but that's for energy. But energy is still going to be a drag until they can get enough production going on. Um, it just comes down to is, yeah, people say, well, they're not making money on energy. Why would they want to ramp? Because like they weren't making money initially with their vehicles. Doesn't mean that they can't make more money. It's just there is going to be a drag until they can get enough production going on. Once they get enough battery production going on, then I think they'll be better off. And they may say that they're not battery constrained. They are. Um, like anything else, uh, if they could make more batteries and more megapacks, they would. They're constrained, whether it be square footage in their factories or just anything else. They have needs. If you were to get into their mega pack purchasing, you can't buy a mega pack for 2022 in the United States. It's not feasible. That tells you how constrained they are right now in production. So that's the reason why they built why they're building a mega factory in California to do that. That also gives them easy access to trade, so they can actually ship it to points all the world. You can go directly from California to China. You can go all the way into that area, and then you can also use the Panama Canal to ship into Europe. So I mean, it's a good thing. Or they can ship across um, the country um, with rail and delivery to the ports on the East Coast, and then from the East Coast to um, Europe. So I mean, the mega pack is going to be a big selling point for them in the long term, but it's not right now. Revenue other, that was mainly because of a slight increase, mainly because of the Cyber Quad for Kids. I think that's going to be a good one. Will they get more money coming from them for full self-driving? Possibly, but they're still in beta mode in that regard. I don't see that changing anytime soon, so that's not going to happen. Um, Gross profit prediction. I'm looking at a pretty good number here. You'll be pretty happy to see this. So I'm looking at about $200 million increase year from last quarter, principally driven by the cost going down a touch and having obviously more with a similar number of vehicles. So you're going to see a slight increase. Cost for energy, I'm going to say there's going to be a loss at the end of the day. It's going to go down, obviously, but from Q1, but I'm really looking at a reduction in placements. Cost of revenue, other, obviously, they're making very little money on those, but they are going to be making money at the end of the day, which they did in quarter 4. I'm going to keep that in line. Total cost of revenue, I'm looking at 12.9. So yeah, it's higher, but their profit still goes up, and that's the main thing. As long as their profit goes up, I think Wall Street will be happy. Wall Street analysts, which obviously they have no clue how to analyze Tesla, but that's a different story. So, what's my prediction on operating income? So, R&D, this one I'm thinking is going to be a slight increase, not a huge expense. SG&A, so sales, general administration, that's one which I predicted last quarter pretty close compared to anybody else. Nobody else had this even. They didn't even have it remotely because they all forgot about Elon's stock sale. That does impact operating expenses, so that's the reason why Q4 2021, everybody needs to just throw that number out of their prediction models. Just going to be honest and tell Elon sells more shares for stock options that he has. There's no reason to ever look at that number ever again. That number is so far out of the norm, it's not even worth talking about. So I kind of looked at it from the Q1 of 2021. when they're starting ramping up Shanghai more. But yeah, my Q1 2022, that's essentially a slight increase of about $120 million, so not a huge amount. It's going to go up more. I think Q2 you're going to see that probably go up to about 1,400. I wouldn't be surprised if it goes up that high. Total operating expenses, I'm looking at total of 1865. Not too bad. Obviously, that's going to increase their operating income by a huge degree. And when you look at it from Q1 of 2021, that's a 5x increase. I don't think anybody's going to say bad about that when you look at year-over-year. Even going from Q4 to Q1, you're looking at a pretty good increase of $500 million. As I said, most of that is from Elon's not having that stock sale issue, and also slight increase in prices. So share income predictions. So this is all the items that constitute your share income. So this is numbers that Wall Street kind of likes to look at a little bit at the end. They want to see what the end is, but these are just what the breakdown is. So interest expenses, there's other expenses in there as well, but that ends up giving you a income before taxes of 2.9 billion. Provision for income tax, you're looking at 428, which obviously is a little higher than it has been in the past. I'm just expecting it. There's talk in the Tesla community about Tesla using their previous losses and write those off as part of the taxes. Given the political climate in Washington, D.C. over corporate taxation, and especially over Elon's wealth, I don't see Tesla ever touching those dollars in the near term. I just don't see it happening. Even if the Democrat Party loses in November, which given history, they probably will be. Not sure how badly. That's the question that everybody's going to have on their mind. It's how badly are they going to lose? It's not when are they going to lose. But that's just from history. History tells you it happens. every single president faces a rougher time the last 2 years of his term than his first 2 years. So yeah, I think that's going to be a problem for them. But even if they do lose, it's still not going to be a climate that people are going to want to see Tesla put those credits to bear. So I don't see that changing anytime soon. So in the end, that reduced down net income to 2548. Net income from subsidiaries, that includes any company that they have purchased that does not bear the Tesla name, but they're still operating under their old name. Those are just net income costs that they'll add in, principally just because they're buying product directly from their companies, and therefore they're not actually making money on the product, so it impacts your bottom line. So that puts your share income, though, at $2.5 billion, which is a pretty good increase. And in fact, if you look at it from Q1 of 2021, you're almost looking at a 6x increase, but it's still a 5x increase, which is still a really good number. So the last thing to look at is EBITDA and earnings per share. Now, this number has a few caveats that I'm still not satisfied with. I wouldn't be surprised if it changes quite a bit. The DAI, depreciation, amortization, and impairment, I honestly think that cost could go up even higher than already predicted. I would not be surprised if it ends up being 250 or at 950, but that's dependent upon what they want to do. Stock-based compensation, I'm looking at obviously a lot lower number. It's probably going to be one of the lower numbers they've had in a long time. principally because they're not doing Elon's. I haven't heard anything about Elon getting any stock-based compensation this quarter, so that's not going to impact it. There's a lot of things that's not going to happen. They might have some coming in for the employees, but as I said, the stock price has been so high, I don't see that changing too much. EBITDA is going to be at $4.3 billion. That's a pretty good number for them. Obviously, you're talking at least close to a 3x increase, 2.5 increase over Q1. So that's going to help them out quite a bit. Net income per share, looking at $2.8 billion, slight decrease from quarter four. But that's principally because you don't have the energy in there. There's other aspects that take it out. So at the end of the day, yeah, it's going to be a little lower for your earnings per share. It was interesting was their earnings per the number of shares outstanding did go down in Q4 versus previous quarters. So we'll see what happens in Q1. I don't see that changing too much for the share count. So that should be roughly equal. If share count does go down again, that would mean that the earnings per share will go up. However, at the same time, if they increase the number of shares, if there's more shares that were sold out of the treasury, you're going to see that number go up. One final note, the stock split that is being offered out there, as I stated in past comments and other YouTube videos, Tesla could not do another stock split, and they still can't do a stock split, even if they wanted to. The only thing they could possibly do is a 1.5 to 1 stock split, which is honestly is nothing. It would probably drop the stock more than help the stock at that stage. People just won't be happy with that. So I don't see that happening. So for those that don't understand what's going on, when you incorporate a company, and you have shares, obviously because you're doing it as a S corp, shareholder corporation, the amount of shares that your treasury has is fixed. You can never give out more shares than what the treasury has. That's one of the laws that they did from back in the 1800s. There was, if you go into some of the history of the stock market from the 1800s, there was times where Cornelius Vanderbilt, in fact, faced a situation when he was buying the Erie Railroad. That railroad company had the ability to print to offer more shares than what their treasury had. So what happened was a couple people, middle management inside Erie, found out about that. They started printing their own shares, and there's nothing the board could do about it because the board didn't care. They want to keep their control of their company, so they had no problems with it. So it ended up causing some issues long term. So that's one of the things that the SEC has put in place is you cannot have more shares outstanding than what your treasury is authorized to give out. So that's one of the things to consider. So the shares outstanding number right now is slightly over 1.2, 1.1 billion shares. There's only 2 billion authorized according to their incorporation papers. So my thought process has been over the past few months since they and then of course since they announced it, obviously, but even before then, if they were to do a stock split, I would like them to do to increase the treasury by twice the number of shares than what their stock split's going to end up being. So, for instance, as I said, they have 2 billion in the treasury. If they were to split the stock and they would get authorization by the shareholders, which we'll see what happens with that one. There's some interesting discussion that came out the past couple weeks, or the past couple days, I should say, regarding the Treasury numbers and costs for it. I'll go into it here in a second, but Rob Maurer brought it up, which I was a little surprised about. But so if they were split at 10-1, so if they do a 10-1 stock split, which they might just do, that would drop down the stock price obviously down to $100. It would be nice if they do a 50-1 like Emmett Potters wants to see happen, but I don't see that happening. That would drop it down to a $20 rough estimate for stock price. I don't see that happening. Tesla's not going to do that. There is a benefit to have a stock price in the $50 to $100 range versus a $20 range. I don't see that happening. So yeah, but that would mean, under my hope, is they would do it that way and then split the Treasury by double the number. So if you do a 10-1 stock split, you end up doing 400 billion shares, or 40 billion shares of stock in the Treasury, which I think would be a better number for them to work with. But we'll see what ends up happening. As I said, I have no idea what Tesla's going to end up doing, principally because of what happened with the issues regarding fund companies. They have some trading companies charge by the share versus by the actual cost. So a lot of companies will do, like in Europe and stuff, they'll do like a 1%, 2%, 0.5% charge for the amount of shares that you, or by the amount of value of the share. So for instance, if you trade $50 million in stock, you're going to be charged $500,000 for that trade, which is understandable if there's a 1%, and I have no problems with that. And then same thing when you get out, you get charged that same percentage. That doesn't exactly happen all the time inside U.S. marketplaces. Some of them actually charge by the share. So for instance, if you buy 1,000 shares, they're going to charge you a penny a share. So you're going to be charged $10 just for those trades. Now, granted, it may be a little lower cost basis initially, but when you consider the fact that if you're under $100, I mean, yeah, there's going to be some issues. I don't know. It depends upon how many shares Tesla is going to look at splitting off into. Will depend upon how the fund companies will decide to vote on, and that's going to be the big one, because those have a huge stake in Tesla. As much as the private individual shareholders have a good amount of shares, with Elon's Elon. Who knows what he's going to end up doing? If he agrees to it, he'll probably pass, just because he'll have the power with the individual shareholders. If he doesn't, if he abstains, then I don't see it passing. It just depends upon what Elon decides to do on it, what his personal view is. In the past, he says the stock price was too high, and we'll see what happens with that one. But I have no idea. So if you have any questions, comments, concerns about these numbers, or my thoughts at the end here, feel free to leave them in the comments below, and I will see you in the future.